Okay, how we doing? Can everybody see my screen and hear my voice tonight? All right, I see my Muhammad's here. Nice to see you, brother. Bill, how are you? Gary, what's up? Mike. All right, my diehards here on night before Thanksgiving. All right, nice to see you guys. All right, let's do this. It is, I don't even know what the date is. Wednesday, the day before Thanksgiving, I guess. All right. We are in almost in the third phase of the fourth quarter. So you're in second month, fourth quarter, 52 days behind you, 38 days to New Year's Eve. We know that these aren't all working days. I run out of time. The clock's ticking. So let's see what we got. Done. We're sitting right here on the 23rd, Wednesday. Done, done, and done. This is end of the week for everybody. Trading should be anyway. You can come back Monday, Sunday, Monday. There should be some action when the markets are closed. Listen, Thanksgiving's a U.S. holiday. So there's still going to be some action in the overnights, but it's going to be dried up because the U.S. session isn't participating. But coming out of Thanksgiving and going into, I guess, around the 14th, 21st, there's going to be some setups. So there's still time for you to do some things. It's never too late to get started, man. And that's part of the stuff I want to talk about tonight. I got typical stuff that I always get. But let's see what I'm looking at for me. So we are sitting here on the 23rd. We're sitting here tonight on the 23rd, Thanksgiving evening. I will be here. I will be here on the 7th, and probably the 14th is going to wrap it up for me. So there's 3 sessions left before we take a break going into January 1st. That's it. But I don't know what your situation is. I don't know where you're at with the whole Christmas thing, but it is a time to take some time off, be with family, and remember why you're even here, what the whole purpose of all this stuff is. So anyway, for what that's worth. Okay, 12-week year. We're going to hit the ground running on this right after the holidays. We're going to redo it. I'll pull from it. We'll build some models, get some things going for you guys. But, I say this all the time, and man, it never fails. This has been going on since I started, and it's crazy. Going into Thanksgiving and Christmas, people start to realize the year's over, man. I always get a surge of emails asking about charting questions and stuff like, oh my God, will you look at my homework? It's never failed since I started. It's the craziest thing, right? I guess it's the reality of another calendar year is closing in. Many start to feel some urgency. The 12-week year is supposed to remedy that and make you feel some sort of urgency by breaking the year into pieces and treating each one of those quarters like it's the last quarter of the year, right? So what do? It's a temporary motion, but it's part of a permanent problem. This is a society bullshit thing that they put on everybody about sales and closing out the year strong, but you have to figure out how to treat yourself with that same urgency, or I don't know, create that emotional feeling all the time, right? If you want to change, you got to be the change. You got to build off the emotion, create some momentum, and form the habits now going into the first of the year if you expect things to be different. Right? It's you kind of have to reinvent yourself. It's not easy, but it's doable. I've been at this a long time, but here's the thing. I would want to insult my parents and say I came from nothing, but I freaking came from nothing. I was a firefighter. My best year was like $81,000 a year. Believe me, it's not a lot of money, man. It was a living, and it wasn't a very good living. So whatever your circumstances are, and I know someone from another country is going to tell me, Steve, that's a lot of money, shame on you. Yeah, I understand all that. But you don't understand what you're sitting on. You're sitting on the biggest market in the world. Man, when I started trading Forex, it was 1.9 trillion a day, and it's probably over 6 or 7 now. I haven't even looked in a while. Last time I looked, it was 5.5. That was probably like a year ago. It's just exploded. The opportunity is endless. There's millions of dollars sitting at every pip available to you. You have to figure out how to extract that out of the market and get your float. I don't care if it's 30,000 a month, 30,000 a year. You got to figure out a way to make your life better, and it's right here. How am I going to get you, right? Remember, how do you, I say this, haven't said it in a long time. How do you eat an elephant? One bite at a time, man. How am I going to get you to start taking the bites going into next year? I want to plan a session for you guys for probably right after the holidays. We're going to talk about the 12-week year. We're going to walk through everything. I'm going to actually physically have to map out a business plan with you. I've been asking, and it's, man, I appreciate the guys that do it. But it's the same people over and over, and those are the ones that eventually move on to success. It's really just a matter of doing the reps, right? I always talk about this guy, and listen, I'm not a huge Tom Brady fan, by the way. I just want to make sure you guys know that, but I'm in awe of his work ethic and what he's done with the position. Why? The guy goes in at 5 in the morning, goes home at 11 at night. It cost him his family. I mean, his wife left him over it. Is that admirable? Maybe he could have toned it back a hair after playing all the years. I don't know. But that's his road. That's his path. You have to find your path in this business, and it requires reps. I know a lot of you are afraid to be wrong, afraid, whatever, afraid of having money. There's so many deep seated emotions that you have to overcome to be part of this business. And I understand it, but you can do it. And I'm going to hold your hand, and we're going to start right after the holidays, and we're going to map this whole thing out for you, and we're going to make it happen. And I'm talking to a handful of people in here that have written me, and I don't want to say your names, but I'm talking directly to you, but it's going to benefit everyone. All right. I got a really good homework submission, and I don't know if he's here tonight, from Steve Wilson. He gave me his permission to use his name. And I'm seeing if he pops up. He might not be here. I know everyone's busy. Okay, so I want to thank you for sending it in. I want to be clear about something before I talk about this. I don't have this software, and I don't sell this software. I'm not an affiliate of anybody's stuff. As long as you guys have been around me, I don't sell nobody's shit ever. It's not how I do business. I don't push junk. I don't give out links, nothing. If you want to buy the software, find the guy. Don't ask me about it. All right? And that's as polite as I could be about it. So, how do you adjust your performance without changing anything that you're currently doing? Okay, well, first of all, you got to do an assessment. I asked you guys, send me a 30 trade assessment or a 50 trade assessment. Okay, well, Steve took it a notch higher, and he actually went through, assessed it in the software, and the software it's a great tool, and you could do a lot with it. I used to do this, unfortunately, manually. I guess I should have wrote some software for it 10 years ago. But what I want to show you is that he's doing well, and his numbers would make you feel like he's not. But math is math, and I want to go over that tonight. All right, so before I go, I want to make sure everybody's clear about what a profit factor is. That was a question that came up, and people don't really understand it. So if you have a systematic approach, which we do, profit factor is of a 1 or less than 1 is a system that is losing, right? If you have a system that trades, and my benchmark to me is 1.5 or greater. If you have a system that trades at 1.5 or greater, it's relatively profitable. All right, 1.5 they say is the higher end, 2.0, and there's higher numbers. There's 3 and 4s, and it's basically they take the gross loss and the gross profit and divide it by each other or itself, and they come up with this ratio. So if you're making 6 to 1, 7 to 1 trades, then your profit factor would be 3, 4, 5, etc. But a good benchmark to start is 1.5. Anything that's earning slightly under 1.5 is close enough. Few tweaks, you can get yourself there. All right, so that's what profit factor ratio is. So now he did some homework. He sent me the numbers. Let's look at them together and go through and break them down. I want to talk about them because they're really good. So I got to get my glasses for this. Sorry. All right, so if you look at the very top line, realized profit and loss, $46,111. Not bad. Okay, he has nothing open, unrealized profit, no open float. His absolute drawdown, 1,300. max drawdown 7,600. If you take 1,300 bucks and times it by his max losses, right, in a row, it would give you about 7,600 bucks. All right, spread, we don't care. It says 34.9. That's got to be 3.49 or whatever, because you know they added the zero, probably messed up the software. Anyway, his gross profit was $100,782. His gross loss was $54,000. You guys, do I need to circle this, or you follow me? I'm going through the sheet right here. Okay, so his loss was 54,000 bucks. Sounds like a lot of money, but it's not. His profit factor is 1.84. Okay, as long as his profit factor is 1.84, you take this number divided by this number, you get 1.84. Okay, he took 90 trades in about a month's time. He had 43 profitable and 47 losers. Okay, let me make sure you see that. 43 profitable trades and 47 lost trades. But Steve, the guy's not even hitting 50%. Right? If he was 43 and 43, he would be even. But he lost more than he won. What saved him? Risk to reward ratio. If you have a risk to reward ratio of 2R or greater, you will make money even at 50%. I've been telling you that for years. It's math. It's not rocket science. Okay? Okay, someone put in, let me see, let me read this. I did the same with 43 win percent and 53 loss, but I made 3.4 thousand. Yes, so you had a less than 50% win rate and you still made a profit. Think about that, how powerful that is. So I've been saying this for a long time too. Don't worry about being right, worry about being rich. And if you trade the numbers always flesh out in your favor. The problem is that if you get 4, 5, 6 losses in a row, you become discouraged. And that discouragement breaks you and you start passing on trades or pulling up or messing with the math. And as soon as you mess with the math, you mess with the system. And the number goes from 1.8 down to 0.9, 0.7, and you screwed yourself. It's really, I learned this on the fire department, man. And I used to joke around, anytime there's pain, trade through the pain. But you can't quit in the face of danger. You can't quit in the face of adversity. You have to pull. Your job is to execute what you see, not based on what happened before and what may happen in the future. Your job is to pull the trigger. Okay? If a cop didn't pull the trigger when he was faced with a gun, right, in his face, he probably would get killed in short order, right? And if he did that every single time, he'd be dead or out of a job. They'd be carrying him out in a bag, right? You have to be a puller. You have to squeeze the trigger, man, in anything that you do. No matter what you're looking at, if you're scared, fear, you got to put it aside and pull. Okay? I was in a business that had a lot of chaos before I started doing this. And this seemed easy to me as a transition. There was a lot of stuff going on. I was in some crazy shit in my life, man. It's funny, but my wife used to live out in the area, and that's kind of how I met her. But there was a tanker truck, hit a car and a school bus, smashed the car, slid it into the gas pumps. The gas pumps fell off the island. There was gasoline everywhere. It was a tanker truck. I mean, I could go on for hours of all the danger. We rolled up on that at 3 o'clock in the morning from a dead sleep, and it was 3 of us, and the nearest help was 15 minutes out. They used, budget cuts in the fire department. 3 guys on an engine. You're looking at a massive scene, and people needed our help right now. You got to ignore the danger, man, and pull. Start doing what you could do. You got 3 guys. 3 guys got to bust their ass and make something happen because it matters to that one person that you save. And in this instance, you got to save yourself. You got to stop being afraid. You got to approach the new year with some excitement and realize that it's just friggin' math and candlesticks. All right. So here's his equity curve. This is what he did. This is nice. Okay, here's his gross profit, absolute draw, all his numbers. Total net 46, positive equity curve, and a little choppy, but that's just the business, man. There's nothing wrong with this. This is an absolute perfect assessment. All right. So now here's the question I want to put to you. What can this guy do without changing a thing? What can he do? I've been talking about this for I don't know, a year, but at least for the last 6 months. What can this guy do to improve without changing anything? Anybody, throw some ideas at me. I'll give you a couple seconds because you may or may not get it. Okay, let's see. Adjust the cycle analysis. Yeah, not a bad idea. It's so simple. It's like, duh, right? Okay, so let's look at it. Here's his trades one at a time. Maybe if you look at this sheet, okay, look at it now and tell me what he can do. This is the stuff I've been talking about that I was going to help you with, but you could just send me the software sheet and I'll help you in 2 seconds now. What can he do? Anybody? No, not lot size is a good guess, but if you look over here, he's scaling his lot sizes. Where are we at? Okay, right here. He starts with about 6 and change and ends up at 7, 9, almost 8 lots. Okay, let's look over here in this column. This is the most exciting column I've ever seen in the business, in the history of the business. Okay, check it out. Now, without changing a thing, let's look at his draws on every trade. Okay, the 15s, those were his stops, so we don't look at those. 4.4, 8.8, 3, 3.6, 6.8, 2.3, 1.6, 5.1, 2.3, 7.8. Holy shit. When he was right, he was friggin' right. Correct? When he was right, he was friggin' right. No draw. Right? There's some number in there. I don't know the pairs or whatever, but there's some number in there that accounts for spread. So you could, right off the top of your head, you can take 0.1 off of there, or I'm sorry, 1. So if there's 1 pip spread or 0.8, 4.4 would be 3, 3.4, 3.6 if it's 0.8, right? Okay, so then this guy's in good shape. So now we go over here and we look at his stop loss size as 15. Okay, 15 fills at 15. A 30 pip trade was a win. The max draw was 4.4. So when he pulled the trigger, he had a 1 pip spread, 3, and he went right to profit. Okay, so now, is this 15 pip stop necessary? It doesn't look like it is. You can go through here, okay? So if we go through here and we move everything down, let's not be ridiculous. Let's say 10. Okay, how many loss trades did he have? I counted them already. You don't have to. There's 24 of them. He had 24 loss trades. Okay, so think about this for a minute. We're not going to be ridiculous and go a 5 pip stop, but he probably can get down to a 7. He probably can easily get down to 10. So let's say if we get him down to a 10, right? That means he saved 5 pips on every lost trade. There was 24 lost trades, right? What's 24 lost trades times 5 pips? It'd be 240, would be 10, right? Half of that, 220, 220 ticks that he could shave off the backside of his loss, right? What's 220 times, I don't know, what's he trading? Let's be fair. Let's give him an average. Let's see. He's got 6.6 here. He's trading some 7s in the middle, 8s at the end. Let's just call it 7. Okay, so 220 times $70 a tick. Alexa, how much is 200 and what did I say? 220? Alexa, cancel. Okay. It would be, what would it be? I got to do some math for you guys. So let's say 120 ticks, 24 times 5. It's about $8,400 added back to his bottom line. Okay, so now he went from 46 plus 8 puts him around, someone said 15.4. Yep, thank you. 15.4. I'm sorry. So 46 and 15 is we're looking at close to 60. 60K. That's a 60% return doing absolutely nothing. Thanks for the help. Okay. See, I'm not a rocket scientist. I'm a fireman. Still figure this shit out. All right, look, you see what I'm saying? So now his bottom line went from 46% to a 60% return, which is essentially going to be his check at the end of the month if he's qualified. That's a big difference in pay. Doing absolutely nothing different than he was already doing by changing the R value, right? RVR of his trade. Could he conceivably get it down to 7? Yeah, he could. And maybe 5. You got to go through and see how many broke the 5 threshold if that makes good sense for him. I see a few that were 9s. Those would have been stops. There's an 8.6 in there towards the bottom, down in here. That would have been a stop. The idea is to eliminate the stops, right? Okay, what does someone else say? You could also hold on for more pips. Yeah, but the thing is that's not always an answer. It's an absolutely correct assessment. He could hold on for more pips. But here's the deal. If you got a 3, he's going from a 2R system to a 3R system, right? Without changing anything. This might be a comfortable threshold for him. You got to remember certain pairs, impulse leg is 30. So if he's catching the edge, which we know that when he actually gets it right, it is the edge. Well, how do you know, Steve? Because his turn bars are 2-3 pips from when he gets in. He's getting favorable movement in 3 pips, 5 pips, 5.1, 7.8. Man, that's decent. Because don't forget the spread's in there. And with time, it's going to get, his turn bars are going to become amazing. So without busting the guy's chops and tell him, go back, do some more studying, man, he's there. It's just a couple of tweaks at this point. Okay, this was a 30. He got, what is it, 40? Let's see, it starts on line 2. So he got 46 trades, and it says it right there, 46 trades, right? October 24th from October 3rd, a month's worth of trading. If you ain't happy with 60% or 40 to 60% in 30 days, then you're some greedy bastards. That's some serious money, especially if you're qualified. The potential is here. It's just getting you to do the work and put aside the fears. And I don't know how to do that, and I'm trying to reach you guys. You have to stop worrying about your win-loss ratio and start worrying about the math problem. And the math problem is pull the trigger. Something interesting here is he didn't move to break even on his trades, and I've got a lot of people telling me that that's one of their hangups. I don't know if anybody wants to admit to that. I will not call your name out if you put a Y up there. But moving to break even too soon and it comes back, taps you out, and does what you thought it was going to do anyway. You got to get over that. You got to leave it alone. There is a point where you should come to break even. Because if you do some bullshit like you're up 27 pips and you come back and take a 10 or a minus 10 or a minus 7, yeah, that's not right. Right? Remember I talked about squeezing it down when it gets close to target? And you go tick for tick, squeeze it out. That logic. We talked about that. This way, at least you get your target or you get some number in the 20s as a scratch. You don't scratch out at +1 when you're up 27 pips. Okay, so there has to be some way, some number that works with you mentally that you could be comfortable handling. All right, so you got to go back and look at this, and you got to say to yourself, man, this is not bad. What could I do? So now you need to go back and back test some stuff, but you got to keep some things in mind, right? Right, reality versus back testing. You got to figure out what trades were fired outside of your office hours. Were they available to you via mobile or alert system? If you are an old guy like me, you don't trade on your cell phone. I don't trade on that shit. I hate it. I'll look at it, keep an eye on it, tablet, whatever. I do not trade on that stuff. It's against my religion. But if you're one of those guys, that's okay. You have some way to get those trades outside of your window. Okay, that's all right. But if the answer is no, then you got to eliminate the trades from your sample. Right? You got to keep in mind too, life gets in the way, man. There are any days that you would have been hindered from taking any of the trades. There's a sick day. So what I'm telling you is when you go back and start putting these models together, which we're going to do, by the way, first of the year. I'm planning on starting from scratch with you guys. We'll go through, we'll talk about analysis. talk about trade models, entry models, ideas, what you're looking for to get in. We got to find everybody's spot. Everybody's different. Everybody sees things different. My personality is very aggressive. You guys know that about me. I'm sorry. It's the way I don't know what's the matter with me, but that's the way I am. But some people like a more calm approach. We got to find an approach that fits each person's personality, something they can live with. If you're very like chill, you're not going to want to trade the way I trade, and I get it. It's fine. But there is a place for you in here. There's a seat for you at my table, man. We just got to find it for you, and we'll go through that at first of the year and try to develop whatever it is. If it's Gartley's, if it's swing trading, we got to figure out everybody's spot. Okay. Because I mean, there's zone flips on higher time frames. They just take longer. There's on dailies you can get them. You got to use bigger stops, but the reward's bigger. So you got to figure out, what, like, okay, I would have took this trade normally, but my kid was sick, so I lost 3 days out of the quarter. Okay, well, you got to account for those things, man. You got to figure out where your sample is going to be, your hours, all these things we're going to talk about. We're going to put it together going the first of the year. All right, let me see what else I had. So anyway, we're going to do some pop quizzy stuff for the next few minutes and boxing things in, some stuff I captured for you all last couple weeks. And we'll probably wrap it up relatively quick tonight. Who's hosting Thanksgiving tomorrow? Anybody want to say, want to admit it? It's a lot of stress. Yes? Okay. All right, well, whatever happens, I wish you the best. Yep, some people, not me. There's peace in that too, There's peace in the not me. Nothing wrong with that. Okay, so this guy, he's doing it. It's happening. He can make some adjustments right within his window without changing anything. And he can increase the system or his systematic approach to it. Just a few tweaks, man. All right, just by simply changing the R values of the trades. Stopping himself out on the ones that were bad 5 ticks sooner, adding those 5 ticks in, puts him in a good place. All right. Okay, you ready? I'm going to give you some charts. I'll do the pop quiz deal. I love these. I don't know if you guys love them. Okay, so we're boxing. We're boxing stuff in for me, man. What I want you to do is I want you to see the patterns, look at them, box them up, show me the entries, and just extrapolate what the deal is. You ready? I'll be quiet for a minute or 40 seconds. I can't take it. 1, 2, 3, go. All right, come on, it's an easy one. Did you get it? That was like 20 seconds. I can't even be quiet. Tell me what you got. All right, so this is pound, all right? And looking at this right off the top of your head, you should see shoulder, head, shoulder, right? Okay, coming into the lows. All right, now, I want you to notice some cool stuff. This is what I love about the book. And once you understand you don't need the book, it makes it even cooler. See this heavy liquidity right here? See this heavy liquidity right here? Okay, watch. Stay with me. I'm terrible at drawing. I don't know if okay, stay with me. There we go. All right. The area they broke through to set the low became the area where they come back and repeat. That's how a head and shoulders is developed, right? Shoulder, head, shoulder. There you go. So that's why you take the rejections, the pins on the bars and the closings of where the body's closing, you make an aggregate and you stretch it out into the future, because you take that right there where it bumped, right? It bumped, made it through. It bled and then stopped. Look, this is even a micro box right there. See it? You stretch this micro box all the way out. That's a very, very solid micro entry. I mean, down, you probably won't even get filled. It's so thin, right? There's like literally 1 tick inside the box. This is the better box, but I want you to understand what you're looking at. Heavy liquidity gets absorbed, fades, 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 book turns black. They punch into the level, they eat that, they eat this, they get the turn bar back up. They get the vector back into the lows. There's your yellow. There's your yellow and orange rather. That's your low formation. The book flips higher, gets above VWAP, flips higher. This closed above this and above VWAP, took out the level. That would be your 50. They took out the level and they faded back into the previous shoulder level, and then that's your entry. And if you didn't pull there, then they flipped it again one more time for you for your birthday. Okay, look. So what happens is you understand what you're looking at. You have a head and shoulder pattern developing. You got a shoulder and a head. I like it, Steve. It looks good. I'm going to project this out into the future. I'm looking for an entry over here on a limit or another micro flip before I get in. Okay, they come back. You get the shoulder rejected. They shift aggressively above this level right here. Close above, take out these levels, hook back. There's your entry right there, and there's your trade. Right? You get a little stutter right here. Why? You're going to get a stutter because the book had liquidity in it at one time. So what can happen here? You're going to get maybe a sideways move, but the ultimate move would be to get above, retest, and stay with it. When this does this, stop goes from here to here. Okay, why? Well, because if they flip the book higher, then price should go higher and continue higher. If they break this level and close below these levels, then price is more likely to retrace back into the lows. Now, you have to understand, if you're looking at a 15-minute chart, 5-minute chart, 1-hour chart, these prints are going to be different, and here's why. You ever notice when you get that beautiful W formation, you get the hook back and it goes, and then 2 hours later, it comes all the way back and does that? And that's part of a bigger zone flip, okay? This might be the 15-minute chart. This might be the development of the 1-hour chart flip. That's what the difference is, time frames. So you'll get a nice 15-minute setup, and you need to take that for what it's worth, one impulse leg, 30, 35 pips, unless you want to sit through all the retracement draw for the 1 hour to continue. But there's actually two trades in here. You can take the initial flip for higher price within the intraday time frame, 15-minute, and then when it redevelops on the 1 hour, right, it's going to take a couple hours for these bars to turn on the 1 hour chart and get back down in there, right? Okay, let me see what you wrote. Out, but I mean, there's no head fakes, man. Anyway, yes, it's a fake out. They show a quick aggressive shift through, and then the higher time frame needs to get filled too, and they come back. We know that. So there's two trades in there technically, but understanding what's going on in the background, right? I've always talked about this background stuff that we couldn't see. When this book fell into my lap from one of our former students, it was like, I don't know, what's the right word? I felt vindicated, a gift from God. I don't know what you call it, but it's basically everything that I ever knew was true, but couldn't prove it to the retail level until this thing was invented. I was taught exactly this stuff, that all this stuff is there. It's liquidity, it's absorption, it's all these things we've talked about, block zones, right? Right. Once this thing flips, this whole thing becomes block, trap, volume. And then when it flips above that, right, then all this stuff gets blocked. All these people are trapped. It's all the stuff I've been telling you guys for 10, 11 years and trading for 20 plus years, 23 years, 24 years, I don't even know. Getting old. It's there. All right, you ready? Next one. 35, 40 seconds, because of course time's never enough. Go. All right, this one's kind of easy, but there's some important stuff in here is why I included it, right? When does this become a valid W? That's the question. All right, look, this looks like a W, but this is not a W, right? This is the bigger W. Right? You guys see it? And that's when looking at the chart side by side with this would be beneficial. But you have your outside vector, right? Perfectly. You can look, you can take there's your orange, some yellows, you could stretch that out all the way down to here, looking for an area, right? This line, this will be a really good entry. But this is not really the confirmed flip. Where's the confirmed flip? Somebody. Is it here? Is it here? Is it here? Where would it be the flip? You can say, I'm not going to yell at you. Yep. Okay, so where? Okay, so we know that the apex nadir thing, see the little bleed into that orange? That means price was there. See it? So this is where you really start looking for the entry. You could grab this technically, and that's a perfect 1-2 retest. But if you take these orange lines, right? Imagine in your mind, and you stretch them out, and you got to get above this orange stripe for any action. That's the trade. It seems when you're looking at it, it seems like, well, Steve, it's there, it's there. Yeah, it is. But remember, you're looking at candlesticks. You got a big look. You got this big outside push. You could imagine this in your mind. Let's imagine this in our mind together. All right, so you got a big candle, outside vector bar, right? Outside structure. They come off the low and they trade inside the structure. So what's going to look like? A couple of spinning tops, a couple like this. It's going to do this for a while. That was the worst candle I ever drew in my life. Sorry. All right, there you go. There you go. It's going to do this. A couple bars pushing back down, right? Then it's going to turn into a hammer back up. You got to picture this in your mind. If you can't see this shit, you're not in love with it. All right, you got to feel this, man. You got to like see this developing, right? Then you might get a hammer right here, start going higher, right? Then you're gonna get a little bit of a pullback, and then maybe this one right here will break, and that gives you your print, right? Soon as this bar breaks above, right, you get your shift bar, breaks above, closes, high side close, and then a pullback. That's how that's gonna print. Why? Because they got to pour some money into this bar to get the POC high side to take out these levels of orange and yellow and the gradient in between, right? So in order for that to close above, they got to drop order flow in there. Picture it in your mind. How many times have you seen a shift bar and you're like, man, is that the shift bar? Man, if it breaks above the structure to the left and takes out this whole boxed area, right? Let's box this in. It's all trap. Let's box this whole thing in. Okay, trap volume. Look at that. Man, that's a lot of cash laying around down there. And then they break, retest it. See you later. Call me sometime. We'll have dinner. Gone. That's how that plays out. 99 out of 100 times, that's how that plays out for some number at least to break even in a trade. They didn't think about it. They didn't spend the weekend down here because they were bored. They were collecting cash. So this took a while to develop, even on Bookmap. Look at it. Look. This is the timeline down here. 6 in the morning, 5:45, all the way back to session 4:30, 3 o'clock over here at the open vector. Trap, break. Hours. Okay, so that's what's going on. So this is not a valid zone flip until this closes above these areas. And picture in your mind, the candles probably stop dead right there. Maybe a little wick bleed through like that, right? Or there's wick right there and it closed like that. I've showed you those flat prints in pound where the bodies close like literally you can like hold a ruler to them. It's amazing. When you see that, where I come from, it's called a clue. When they start flat printing like that and they're holding that level and all of a sudden one candle gets through, right? And he closes aggressive, a big green candle, and maybe has a little wick on the bottom, very small wick on the top. And you can imagine in your mind the POC is sitting somewhere here to get that shift, and then you get that pullback into the level, and it's gone. And don't let that pullback fake you out. That pullback doesn't mean shit, excuse my French, till it gets below here. If it gets back below here, then you got to be a little cautious because they just bump it, gone. All right, next one. By the way, these are all active patterns that happened in the last week or so. Okay, go. Bye. Did you see how sneaky I am? I left the candles on there for you guys. See them? That's exactly like I drew it, isn't it? All right, what do you got? Come on, this is a lay down. Okay, look, this is exactly what I just showed you. Look, that's where the pattern validates. Right here, look, take these, draw them out. Okay, now what? They closed above. They pulled back right into. Right, so if you drew this correctly, let's draw it correctly for everybody that's scoring at home. All right, tops of the bodies. Right, you're looking at, okay, there's a close there. This one's low. This one's kind of low. Okay, so you want to come down. You want to try to encompass a good chunk. A good average size box is about 10 pips. Okay, so if you're drawing like 25, 30 pips box, you might be on a different time frame than me, but you're looking for these, look, right up and down railroad track. Vector push through, but can't get above, comes right back. Fishes into the low, comes back up, can't get above. Gets above, quickly smack back down. Then all of a sudden they come down here, print a micro W, right? There's basically your edge and wedge theory. And then they break out higher and they make a very decisive move to absorb all this liquidity. When the move is decisive and clean, right? What's decisive and clean? Look at that straight vector run. On a 15-minute chart, this is probably one big oversized candle, right? And then they give you a nice finger roll. I don't know what to call this thing. I've been talking about it. A-frame, V-frame, right? This is a big A-frame.
So this new little Wi-Fi camera is taking the US by storm. This brand new subscription-free mini Wi-Fi camera provides more security features than traditional doorbell systems.
They always seem to make, the good clean ones always seem to make a nice A-frame, a hole in the book, a space in between where they come back to, but it takes a while. So this is the perfect entry right here. And lo and behold, you can do your measured move out of here, right? You can go from here to here and here to here, and damn if it ain't symmetrical, almost to the tick. And that's a good target. How do you know it's a good target, Steve? Well, because this was where VWAP was before, and there's probably some volume stuck up there. And notice the red still sitting in the book. So that would be the target, and it would be almost perfect, equal, symmetrical move. And if you start really looking symmetrically, this move to here and this half move and this half move are almost equal. So that's like a 1-2 equal push. You guys see that? The symmetry is crazy. The projections to get forward, like to get an idea of where price might terminate, is crazy. That all the stuff, it's almost like they're showing you your hand. It's like you're sitting at the poker table, can read the cards or counting cards. What do guys do? I don't know what that's called, counting or reading cards. You can, or how about you could see through the backs of the card and see what the hell they're holding. If you get familiar with this stuff, you almost can, I mean, you can print your own ticket. Not almost, you can print your own ticket. It's the same. I've been looking at this stuff for 23 years. It's the same shit. Nothing's changed. It's identical. We just have a little bit better tools to see it now, and maybe I'm explaining it a little better than I did when I first started teaching. I was a lot younger when I first started, maybe a lot more immature too. I mean, I'll be fair to myself. That's, you know, it was crazy. So I feel like I've grown as a teacher, as a person, just from being around you guys. It's been humbling and exciting at the same time. All right, you guys seeing this stuff tonight? Or am I crazy? It's there, right? Muhammad, come on, give me some love, brother. Okay, all right. Let's see, I got one more. Do this one. This one's easy to see. All right, run out of time. We'll do it together. Okay, look. I mean, surely you see this one coming a mile away. I oversized this to bust your chops so you could see it. Okay, but the crazy thing is, is that there was buyers, but price was dropping, right? So you got a triple top, right? Price flips right there, pulls back into VWAP, and then drops down. Then look what happens. They flip it. This is man, if you see that much orange in the book, there's no way they're getting through. No one's getting through that. So they blocked it. That's like a very strong block zone. I wanted you guys to see one of those. They're cool. But yet, look, they're chopping in here and starting to squeeze it. But this pattern, right? This pattern, M pattern, shift lower, and then back into VWAP, almost always brings lower price, even if this is on this side. Okay, good. Someone said they're 2 for 2 on their markings. Well, that's what I was hoping to hear. You guys see this stuff, right? It's there, man. Candles, no candles, line chart, it's there. Okay, and really you could have technically sold off of that 50 EMA. That's a really good clean bounce trade. Little pin right through it. All right, what do you think? Okay, let's go back over here. You got an M formation. Where's the book flip? Book flips right here. Sell the first touch. Hang on for a while. Yes, everybody good with that one? It's easy, right? I mean, you can see the M. There's good spacing in there. Right, look at the blocks up here. Right, it bled in. So you could take this line and this line, and you can draw it into the future. There's your M formation block. Right, okay, here's your bottom formation. Okay, so now, it's like I told you, draw the two boxes here. Draw the two boxes. Take this line and take this line. Which way is price going to go, Steve? I don't know. Let me see what they do. Okay, I have my anchor high. They make the M formation. They try to get above. They tap it and stay below. They shift all the way through the structure to the other side and take that side out. Then they finger roll it back clean, right to the VWAP. VWAP's turning down. Under the average, back to the average is a bounce sell. Above the average, back to the average is a bounce long. Okay, and there's your ride. Okay, comes back and hits it again. But even if you got in here, you're still not in jeopardy of losing the trade. But this is that coming back for the higher time frame bullshit. And they shift it and they finish it out, right? Don't chase this long. Don't chase a vertical market. When the market turns vertical for a run, you're getting into level 3 stuff, man. Right? There's another chart I want to show you before I end it. Let me see if I can speed up to it. I mean, they're all the same. Let's see. Where did I put this thing? I'll go back over these. Okay. This is pretty cool. Anyway, this just happened like last Tuesday or Wednesday. They came down in there. Look at all this liquidity they blocked. They trapped it all in. They pressed the price. Right? You could just literally draw a box out of this whole thing. And then they shot out of there. But you notice they stopped trapping at the lows, right? Block volume. They got everybody trapped off of there. They shifted price off of there. And they offloaded. Okay, let me find this one. This is the one I was gonna say. This is the most common question I get about Bookmap and the stuff I'm showing you is like, Steve, the chart don't look nothing like that book stuff. Here's the answer to that bullshit. There's the chart, there's the print. And we're over here, by the way. See it coming into the lows? Come on, man. All right, so the reason I included both pieces was I wanted you to see the low level trap. I wanted you to see the shift off of the lows into the next day. And then they traded, look, perfectly straight line. So you see what they did, right? When they started doing that, that's a clue right there. Okay, they got lower level trap, right? You kind of can make the argument 3, 2, 1, right? 1, 2, 3 in there. Trap lower, they come off, and then here you are, you're blocked, right? All this is block volume. So now they can't get below here. That's a long play as soon as you can get one. Right? They vectored in there crazy. They pushed down. Look at that aggressive push into the lows. Then they came right out of there. This is GBP future contract, by the way. Now this area is blocked. Whatever they got down there was enough, and they're holding it. Now they came out of there quick, and then they started fishing lower again, showing lower price, showing lower price, showing lower price. But you notice that nothing takes out these levels and takes out this level. In order to get a valid short trade out of this, you would have to get back below this level, take out the low, retest the low, and make lower price. They shifted off the low very aggressively and did a sideways print. Accumulation, why? Because everybody probably said, oh, down, pull back, down. And then, but when this did this and gave no rotation into the lows, that's block volume. And you better beware what's coming, because there it is. They took it back in 2 bars and beat the shit out of everybody. They said happy Thanksgiving for them. This is the chart. This is the print. Do you need Bookmap? You do not. And the reason why is, listen, you're free to buy whatever you want to buy. But I'm telling you right now, it has a very steep learning curve. And I drove myself crazy, almost cut my ear off, trying to figure it out. And it's just easier for me to share my experiences and tell you where we're at with this thing. You're looking for these patterns, right? You definitely don't chase vertical markets. That's over. You need to take a position in here near the lows off the W. And if you didn't get it, there'll be another one tomorrow, tonight. Well, maybe not tonight, but soon enough. And there's the chart. Everybody could see that, I'm sure. Okay, I'll go back over the other ones next week. It's 52. It's Thanksgiving Eve. I really appreciate you guys coming out. I'm actually very impressed with the turnout. You guys are amazing. If I was hosting tonight, I probably would not have been able to be here. But anyway, I am not hosting, so we're good. I will see you guys next week. I got, about 3 sessions left. Appreciate you guys. I wish you the best. Happy Thanksgiving to everyone. No matter what's going on in your life, no matter where you're at, I'm here for you, man. All right? It's Thanksgiving. I want to extend my heart out to you. Put my hand out. If you need something from me, write me. Everything, the answer to your future, your finances is right in these charts, man. And more opportunities have ever been available to anybody. You could take the same couple $1,000 that you're going to use to start your account, and you can get qualified. Okay, and listen, I'm a skeptic. I know there's a lot of bullshit, a lot of scams in the business. I know that. So I'm telling you right now, guys in the group are getting paid, and they're getting paid very well. It's not a joke anymore. If you're considering it, let me help you. Let me be the catalyst to get you qualified. It'd be an honor to help you change your life, man. Good night.